Hello, welcome back. It's been a little while since we talked about Meta Platforms, Facebook, and as it happens to be one of my favorite companies to own right now, because it has been absolutely decimated for no real reason, frankly, I wanted to make a video and kind of talk a little bit about some aspects of the company which you may not have thought about. And I wanted to make it a little bit visual, so I prepared a thumbnail that actually showcases what's going on with the company's net income because it's easy to get lost in translation actually and not see the price difference and the net income difference through the years. Now we are looking over here at the 5 years chart, as you will see. This is the 3 years, this is the 5 years. And if you take a look at 2017, or basically near the end of it, beginning of 2018, the company had a stock price of about 180, let's just say, dollars over here. And again, remember, this was the end of 2017, 180 bucks. Right now we're sitting at almost 200 bucks, which is 10% difference really. But if we take a look at the net income growth of the company, you will notice that back in 2017, about the same time, the company was doing almost 16 billion in net income. And if you take it to today, and this is actually a little bit earlier, a few months earlier, it was about 30, almost 40 billion here, with an increase of 147%. So basically, the stock price has increased 10%, yet the net income growth of the company has been almost 150% here, as you will see. Absolutely amazing. Now you will see that Facebook is probably my top company right now to buy because of all these greens over here. They make a ton of sense, and if you also take it to our stock evaluation tool, you will see that it is very cheap, and we have talked about it. We can do it a little bit later, actually, one more time. The other thing that I want to take a little bit of a look is the new module here that I have created, which shows us what analysts are thinking about the company, and these are some price estimates here. You will see that their price targets are at least 200 bucks for the most part. This is 200 bucks, this is 325 bucks, this is 265, 280. From a lot of companies, you will see that they are mostly, for the most part, near 300 bucks, which probably makes sense. But why are they actually pointing to 300 bucks or close to that? Let's actually take a little bit of a closer look at our discounted cash flow model here, and you will see that the revenue of the company has been absolutely amazing. 2021 was 37%, the year before was 21%, and you can see all the revenue growths here. We can try this little exercise. We have done it in the past. Let's just go, actually I'm gonna go lower even, 15%, 17 and 19 here. And the net income margins of the company have been pretty much the same every year. You can see the averages. I'm gonna go 30, 31 and 32. The free cash flow margins, again, the same thing. I'm going to go, let's just say 85, 90 and 95 here, and 13% for the annual return, which I typically want to make. And if we hit calculate, you will notice that analysts are mainly near this value, as you'll see. So the current price is sitting at 200 bucks, and our medium one, then that's the price to buy now in order to enjoy these estimates here, these projections, is 313 bucks almost, much higher than our current price. And our high estimates are sitting at 370 almost bucks. And even our low estimates here with a revenue growth of 15%, margins that are lower than before pretty much every year, and the free cash flow margin of 85%, which is also much lower than what they have been doing. Even then, we're sitting at a low of 264. So I absolutely love this company in terms of its valuation, and this is why I bought a ton of it. Now, it is interesting to take a look at, again, the financial statements and see here the income statement and what I talked about. 2017, remember, there was a 10% difference from 2017 to what the price of the stock is right now. And the revenue has been from 41 almost billion to 118 billion, so it has increased substantially here. The amount we know from the stock analysis module here, which tells us that it has been 190% growth from 2017 to 2021. Again, if you want to get all this information, you can become a Patreon. And once you are a Patreon, you have a free unlimited access to our tool here. You can do your own projections about any stock. And you can find links in the description box below. A lot of you have been asking me about how to get access to the tool. I always have the information in the description box below, but I still get comments about that. This is why I am starting to mentioning it in my videos. And now you know how you can get access to it. Now, this company is not paying dividends, which I like to see, and it has very low debt to equity ratio, and this is also significant because without much debt, the company doesn't even get much debt. Without much debt, the return on equity is almost 30%, which is amazing to see, and the net income margin is also pretty great here. So there's everything is going very fairly well about this company. Now, I understand that there are some concerns about the metaverse, but even if that fails, the company may lose some money up front, some money that they have invested, but their overall business is doing really, really well. And of course, I'd like the metaverse to succeed because I'm a stockholder. But even if that doesn't happen, then the company is still doing pretty greatly, and I'm expecting them to achieve even better returns in the future. And this is why, again, I own a lot of it. And this is why I wanted to make this vid, just to point out what you may have been missing a little bit, because it's easy to get lost in translation, missing this kind of key elements here. Another key element, for example, the fact that the free cash flow back in 2017 was 17.5 billion. Right now it's sitting at 39.12 billion. And again, you can use our stock analysis tool here just to quickly see that this growth is about 124% from 17 billion to 39.11 billion. Significant free cash flow growth as well for the company, and also total equity growth that has been increasing without actually issuing extra shares, as you'll see. And the company actually has announced a buyback, so they will be buying back shares. We can see in the stock news here that it's being discussed a lot. 3 favorite stocks right now, 2 cheap stocks to buy, generational buying opportunity. You can kind of see what people are talking about in terms of meta platforms. This is a module that I love taking a look at because it can kind of point me to the current trends. You'll see a lot of articles. Actually, 2 of them were released yesterday, and these are today, and these are yesterday articles. So a lot of discussion about Facebook, and so this means that we could potentially be having some extra buyers over here, which I'm fully expecting for the next months, to tell you the truth. Of course, we have to be careful about the current market conditions because there is the inflation and all that. But regardless of that, the business is doing great, and at these current prices, where I firmly believe that fairly low right now, this is the time to buy, not when the stock is going to be skyrocketing in, I don't know, in the next couple of years or so, who knows. And of course, the social trends have been going a little bit down because people are not really talking about this too much in social trends like stock tweets on Twitter or Twitter. It's actually becoming a little bit sidelined by other stocks. You can kind of see here in the market trends. It's interesting to see that there are other companies being discussed like Roblox right now, JD, SoFi, Zynga, Apple, very, very well-known companies that we tend to talk about quite a lot. And, this module can actually show you a lot of different versions of what is being discussed right now on Twitter or stock tweets. But as nothing much is happening right now with Facebook, it may be even a better buying opportunity because it's discussed a little bit less. And the thing is, again, if we take a look at what the company has been doing financially, this is what really matters. Not the fact that it got 4%, almost 4% last Friday. That's not the point. The point is that the company is very, very cheap based on their financials. And right now it's a fantastic buying opportunity after going down almost 50% from its 1-year high, 384, which, remember, it's about our high estimates price, really. So even this one is not very far-fetched for the company. It is more expensive than we would like it to be, but it's not very far-fetched, and right now we're sitting at a much, much lower price. So that's what I wanted to talk about in terms of Facebook. It's been a little while since we last talked about the company, and I kind of thought it would be a good idea to take a little bit of a deep down and talk a little bit about the financials and what people may have been missing, especially as it has actually lost a lot of its value lately because of the current market slump. It may be, and I firmly believe it is, a massive buying opportunity, really. Thank you for watching this one. I hope you enjoyed the video. If you did, please take a look at this video that I made earlier. In this one, I'm discussing Kroger, a well-known grocery store. And please remember to leave a like on this one and subscribe as well if you're not a subscriber. I'll see you in the next one, guys. Bye-bye.